Hello guys, here with you Anna Tutova, co-founder of Coins Telegram, and we have our guest Ben Forman, who is founder and partner of ParaFi Capital, and they are one of the first institutional investors in the digital assets space. Ben founded ParaFi Capital in 2018, and they have both venture and liquid arms, and we'll know now more from Ben. So great to have you here, Ben.
Yeah, it's great to be here. Thanks again.
Yeah, so I guess the most discussed currently question is the turmoil on the market and the shakeout, what happened yesterday, some kind of black swan event. So what are your views on the current market? And you told that it's quite positive for the industry in your opinion. So can you comment more on that?
This rhymes a lot for me with where we were in kind of March and April of 2020. And let me explain why. So let's rewind the clock to March 2020. You had lockdowns that were just beginning after the outbreak of COVID-19. And prior to that, in the months prior, the Fed was starting to, we were actually starting to raise rates. Powell was raising rates. And at that point, the Fed response and central bank global response was to basically take rates to zero. And it really began a period of time of zero interest rate policy, very significant quantitative easing. And that was really rocket fuel for Bitcoin and the broader crypto industry to take off. So I remember initially when lockdowns took place, Bitcoin broke from around 6K down to around 3,200. And it kind of traded sideways for about 4 to 6 weeks. And then eventually kind of the market recovered. Bitcoin went back to 6K. By the end of 2020, Bitcoin was beginning to test all-time highs again of 20K. And then we had, the 2021 bull market. 2020 was right around the Bitcoin halving took place in April or May of that year. And again, like very similar to today, we have you have the Bitcoin halving. I think today what we're going to see discreetly is that the Fed will have accommodative policy between now and the end of the year. We can have a debate around how many rate hikes. I think the market's projecting or how many rate cuts. The market is projecting 5 rate cuts between now and the end of the year. There's a 42% probability currently of an emergency rate cut before the September meeting. And I think all of these factors over a medium-term time horizon are incredibly positive for Bitcoin. And what's positive for Bitcoin, I think, spills over into the broader altcoin market. So my sense is that all of the fundamental story around the industry is very much intact, and that monetary policy getting pulled forward is only really a net positive.
And don't you think that people will be now even much more scared to invest again into crypto after the yesterday's event?
Yeah, well, look, I think fear is always a factor in markets over short periods of time. But the market's memory tends to be very short. Investor memories are short, and when prices start to go up again, people tend to jump in. Humology is a bit cyclical when it should be. The markets over the weekend, over the past 48 hours. I've been in crypto now for 10 years, and there have been maybe 5 to 10 different days like this where the market's down as significantly as it is. So this is not a 5 standard deviation event. To me, this is a 2 to 3 standard deviation move. So we should expect to see moves like this in crypto, every 1 to 2 years. I think it's just part of the game, and I think it flushes out the weak hands and ultimately sets up for very healthy growth, going forward.
Yeah, that's true. But actually, I just decided to check crypto fee and grid index, and despite that the prices today rose a lot again, Bitcoin is already at 55K, and yesterday it was 48K. The crypto and fiat green index is even much lower today. It's at 17, and when yesterday it was at 24. So this is quite surprising to see.
Yeah, well, look, like I think it's interesting because I think the key to kind of capturing the upside in crypto is really having like a very long-term time horizon. I think if you're trading short term in this industry and you're using leverage, it's a very difficult game to play and to stay in the game over long periods of time. If you kind of take a long-term view and you don't use leverage to magnify your returns, that's I think how you can kind of like zone out these market moves and just focus on all the fundamental growth that's happening in the space. And look, I think in a few weeks, no one's really going to be talking about the price move. I think there'll be like new news that galvanizes the market. That's the way kind of markets work, is people move on. And look, the reality is Bitcoin's still up 25% year to date. Crypto market cap is still up, over double off the lows since FTX. And as an industry, there are many different use cases that have proliferated and continue to grow, whether it's stable coins, tokenization of real world assets, prediction markets, DePIN. So there's just a lot to be excited about. And I think for better or for worse, like, I kind of just choose to like zone out a lot of the near term, short term price action, because I just think over the long term, it's not going to be as relevant.
Yeah, and did you buy more yesterday with your liquid fund or personally?
I'm not going to comment on that just because, I don't want to talk about what we, what we do kind of like near term in the fund.
Okay, that's fine. You told that you discovered crypto 10 years ago. So you worked at TPG at the time, as I understand, right?
That's right.
Yeah, so can you tell your story? How did you discover crypto and why did you decide to get into professionally into it only in 2018? Or was it earlier for you?
Yeah, so I'll tell you a bit about my journey. I was living in San Francisco for most of the 2010s, and my roommate, back in 2015, was an engineer at Google, and he kept on talking about Bitcoin, and I didn't know what it was, but the name kept on popping up, and he was very passionate about it, and so he sent me the Satoshi white paper, and I read it, and I had to read it a couple times, I think, to really, understand and wrap my head around it. But for me, one of the 0 to 1 moments was actually like downloading a wallet. I downloaded a wallet at the time called Bread Wallet. I'm not sure it's like Bread is still around, but it was like a non-custodial wallet. And I tried like sending Bitcoin to a ledger and just seeing that kind of transaction flow on chain and looking at a block explorer and seeing kind of like that transaction, clear in a block on the Bitcoin blockchain was, I mean, it's actually incredible. Like it's nothing short of magic, in my opinion. And I think it's something that, we all take for granted now because we're so deep, 15 years into this industry, that, we're focused on more complex problems around scalability and zero knowledge proofs and privacy and the application layer. But just at its core, to send value over the internet is magical. And so that was really a big moment for me. I was in traditional finance at the time. This was like really a hobby for me, nights and weekends. But I was spending a lot of time on the Bitcoin subreddit. And back then, there was not really crypto Twitter. There wasn't really an industry. Everyone really talked about crypto and Bitcoin on Reddit. And that's really where all the news took place. And so I ended up, trying to meet with whoever I could in the space. I had lunch at the Coinbase cafeteria when it was a Series A company. I met with Bitcoin miners. I went to meetups in San Francisco. And when I left TPG to join a firm called KKR, which is a large global asset management firm, one of the largest in the world. And I raised my hand to lead their kind of blockchain and crypto efforts as a firm. They had taken notice of the technology, but didn't really know anything about responsible cross-thing, how it could be a risk to different fintech companies in KKR's portfolio, as well as how it could be an opportunity for the firm. And I think what we found in this evolution of the technology is that a lot of the big institutions, like they're very slow to move, they're very patient, and it takes like years for them to actually come into the space, and they come in like in little drips and drabs. And so it's a bit slow. So I was impatient and I wanted to spend 100% of my time focused on this space. And I said, okay, well, look, how often does a new asset class pop up? Like we get a new asset class once every couple decades. And when you get a new asset class like this, coupled with such a special technology, you know, you can't really pick when opportunity slaps you in the face. Sometimes it doesn't happen at the perfect time, but I said to myself, look, like now is the time. I've got to do this. And I left KKR in early 2018 to launch ParaFi. You know, started off small and have grown over the past 6 years into, you know, one of the largest crypto funds globally. And we've, you know, it's been a really interesting journey, lots of lessons learned along the way, working very closely with founders, building their products and applications and protocols, also building the team here. And it's been a incredible journey, and excited for, you know, where we go now from here.
Yeah, that is great. And as well, one of your first LPs is actually the founder of KKR himself, Henry Kravis, and then KKR as fund as well became your LPs. So how was it? Was it easy for you to persuade Henry to become LP in your crypto fund? How did it go?
So you know, so Henry Kravis obviously is known as being kind of one of the legends of private equity and, you know, modern finance. You know, he started KKR from scratch. And you know, I think what also maybe fewer people know about Henry is he's also just a phenomenal person, and he's a phenomenal business builder and an entrepreneur. But he's incredibly high integrity, and I think one of the best things that's, you know, ever happened to me in my career is that he really took a leap of faith on me when I started the firm. I think, you know, he thought there was, I think, something special going on in the blockchain space, and he's one to have a great nose for new technologies and commercial opportunities. But I think, you know, the reason why he backed ParaFi was really just because he had respect for my entrepreneurial journey entering a new asset class. He had followed that same journey in the 1970s. You know, the term private equity didn't exist back then. They called private equity bootstrap funds because, you know, you raise debt to buy companies. That was like a foreign concept. And he had to go around and pitch limited partners in the 1970s to you know, raise money for these bootstrap funds. And now it's like private equity is a $3 trillion industry. But he lived through the evolution and the inception of a brand new asset class and knows kind of what it takes to build a firm in a brand new you know, in a brand new arena like that. And so I think he sees what he saw with crypto in this era, what he saw with private equities in the 1970s. So I think a lot of it was just him understanding where I was on that journey and really taking the leap, and I'm very grateful. And then, you know, KKR also is incredible firm, and, you know, has really leaned into new technologies, whether it's artificial intelligence or you know, autonomous driving, and blockchain as being one of them. So they're focused really on investing in like the next wave of technological evolutions globally, and they view blockchain as being part of that. And so feel very lucky to have both of them as investors.
Yeah, that's really interesting stories, and that such a legend supports, you know, And since you have such a long way back background in TradFi, private equity and credit markets, what do you find the most applicable to the blockchain and crypto space currently?
Well, a lot. I think that one of the areas that we've been really focused on at ParaFi from the beginning is the intersection of traditional finance and decentralized finance. So we are really focused on investing in products that bring traditional financial services and capital markets activity on chain. So that full stack has really been a focus. And so I think understanding how capital markets work today is important in understanding kind of where the inefficiencies are and where, they can be improved upon on chain. One of the first things that really captured my attention in the space, besides Bitcoin, was MakerDAO. And MakerDAO, was a decentralized and is still to this day a decentralized revolving credit facility on chain. It's an asset-based lending facility that's much more efficient and elegant in many ways than the traditional asset-based lending facilities. Traditional asset-based lending facility, you'll have a 300-page PDF legal agreement with a bunch of legalese that describes what happens in different scenarios. And that legalese can be replaced with code, because code is really just if-then statements. Same with legal language, it's really just all if-then statements. But this idea of kind of translating these kind of long, complex agreements that are held on private servers into code that's open, accessible for anyone to view, for anyone to digest and use, is 0 to 1. It's a 0 to 1 innovation. And that really captured my imagination, because if you can do that with credit, you can do it with derivatives, you can do it with insurance, you can do it with payments, you can do it with trading. All of these different financial functions can get translated from legalese, legal agreements, into code. I call them the ing verbs of finance. So what are the things you can do with money? It's lending, borrowing, hedging, insuring, paying, and so on. I think they're all going to get brought on chain, and you really saw that with decentralized finance. I think without really understanding finance, it'd be difficult to invest in the new wave of financial products. I think it's important to bring a fresh perspective and maybe unlearn some of the preconceived notions you have about how the financial system could work, but it's also helpful to have that historical context. That's one. And then look, I think the second thing that's been helpful about having a background in traditional finance is, markets are markets. This is a new asset class. It's different than other asset classes, but it still trades. There's still different market participants. There's still like the same cognitive biases that you find in traditional markets. Macro is important in crypto. I think it's tough to build a thesis around Bitcoin as an example, unless you really understand macroeconomics. And so I think all of that background has really helped inform ParaFi and our thesis as we invest in the space. And then lastly, we work shoulder to shoulder with founders. We've made over 150 venture investments in the space since ParaFi's inception. This is like working with very early stage companies before they even have a pitch deck or a company formed. We put money in. Other times we're investing in very late stage companies in the space that already have 100 million plus of revenue. So we really see the full spectrum. And if you're building a company in crypto, you have the same problems that you have if you're building a company in other industries. You have to hire people. You have to figure out your go-to-market strategy. You have to think about product design. You have to think about pricing. You have to think about capital formation. You have to understand board composition. You have to look at like your gross margins and your unit economics. I mean, these are all things that where the training is absolutely critical in traditional finance to apply those those kind of same laws and same rubric and frameworks to the crypto space. So that's, I think, also been really, helpful for me having that's toolkit.
Yeah, and as well, what is the latest stage you invest into projects?
So we really are stage agnostic as a firm. So, we led the Series D round in Consensus. They own MetaMask, which is responsible for roughly half of all EVM transactions flow through the MetaMask wallet. They've also were the creator of the Linea layer 2 blockchain. So, we invest in like later stage companies in the space. We're investors in, Fireblocks, and we're investors in Immutable and Animoca. So some later stage companies, also very active early stage. But then we'll also invest in lots of like liquid tokens that, are already liquid and trade, and where we have a thesis that, the market is misunderstanding or mispricing risk, and we'll lean in there. So I think broadly as a firm, we aim to not really narrow ourselves into doing just one little type of investing across the full spectrum of the space. The opportunity set's always changing, and we want to be able to move to wherever the opportunity is.
Yeah, and as well, I've seen in your portfolio that you invest as well as LP into other funds too.
So we have taken GP interests in other funds. So kind of backing the equity of funds as business models, when they launch. Like funds are businesses, right? They offer a certain, and they make typically we believe there will be thousands of crypto funds in the future. I think the latest number I saw today was there are roughly 800 crypto funds globally with over 10 million of AUM. I'm not sure if that number is still accurate, but our view is that, in the future there will be thousands of crypto funds, and they'll be specialized by different focuses, whether that focus is on a specific part of the industry, whether it's DePIN focused funds, DeFi focused funds, infrastructure focused funds, and so on, or maybe focused on certain geographies. So whether it's, East Asia, Latin America, Europe, and so on. Africa, we've looked at Africa-focused Web3 funds. So, I think at ParaFi, we can't do everything. So for us, it's been helpful to invest in managers and new managers and help them on their journey. And we also learn a lot in the process because they tend to be deep in geographies or themes that maybe ParaFi has spent marginally less time in.
Yeah, so since you have such a massive portfolio and you have been one of the most active investors in the space, so how do you determine into which project or fund to invest in, and which sectors within crypto do you consider now to be the most promising?
Yeah, so I think that that's a loaded question. I think that I think that we want to stay open-minded in terms of whenever we see a deck from a founder, or whenever we're at a conference or at a hackathon. I think overall, we've seen thousands of deals at ParaFi since over the past 6 years. And I think for us, we keep a very high bar in terms of which ones we ultimately invest in. I think that there are a few different things that we look for. One is, I think, founder quality is absolutely critical. Like starting a company from scratch and getting it to product market fit is a Herculean task. It's incredible. Starting a company and getting it to scale is one of the most challenging things that you can do in the world, period. And so, inevitably along that journey, there will be challenges. There will be obstacles that you have to overcome. And it takes a lot of grit and drive and heart to kind of see your way through those challenges. So we want to back founders that are very mission driven and have a chip on their shoulder and really care about the problem they're solving. Look, I think everyone wants financial success when they're building something, but that can't be the only thing. You really have to have like a deeper why, a deeper meaning behind a purpose behind what you're building. And that's what we've seen in terms of successful founders in the space is that they tend to be missionaries, not mercenaries. So that is paramount, is founder quality. I think the second thing is we look for projects and founders that are solving real problems and that are really expanding the scope of crypto. And what I mean by that is, there are hundreds of different decentralized perps protocols or hundreds of dexes, right? There are lots of Web3 games. There's like in any given category in crypto, there are typically dozens of competitors. So what we're interested in is in backing teams that are like bringing net new users into the space, are building new products that are like actually practically useful for people, and are also focused on like building for the long term. I didn't mention that on founders, but like we really want to partner with people that want to be in this industry and space for the next 10 to 20 years, that aren't here just like for now and will leave in the next bear market. Like we really want to form long-term partnerships because again, it's like the odds are stacked against you when you start a business or protocol, that you really want to be aligned with people playing long-term games. So those are a few of the things we look for. I'll pause there. There's probably a lot more to say, but I'll pause there.
Okay, great. And as well, you have been talking about your experience in TradFi and how it helped you in a current space with crypto. And with ParaFi, you have been actively investing into many DeFi projects. So in your opinion, whether we will see the mass adoption of DeFi by institutions on a global scale?
So DeFi it's been interesting, right? Because it kind of started in 2020. We had DeFi summer, and you had this Cambrian explosion of different DeFi protocols, mostly on Ethereum, but they ventured out into other chains like Solana and Near, Binance Smart Chain, and so on. And I think that if you kind of look at this last wave of growth, there may be like 5 to 10 DeFi projects that actually are relevant today out of the thousands that have started. Uniswap, Aave, MakerDAO. I'm not going to name them all, but there are a handful, maybe 10, that have very strong product market fit, real users, positive free cash flow, and are servicing very much a crypto native audience. I think that the next wave of growth for DeFi and for financial services on chain is really two things. One is we need to bring real world assets on chain and tokenize them. So these could be tokenizing treasuries, stocks, bonds, private credit instruments, physical collectibles. But we need real world assets that are exogenous to blockchains. We need to bring them onto blockchains because most of what's flowing through DeFi right now are governance tokens, Ethereum, maybe wrapped Bitcoin. One exception to that is stablecoins, which have been absolutely critical. But we really need other tokenized real world assets on chain to make it truly relevant and to get the interest of traditional finance. I think the second thing we need is we need more forms of permissioning and identity on chain. Because if you think about JP Morgan, if they're making a trade with Barclays, they need to know who their counterparty is. They need to know that they're complying with debate, laws and regulations on chain. And so today we're not quite there. And we've made a lot of progress in terms of infrastructure getting built, but that will be absolutely critical to bring institutions on chain. You're starting to see it now, but that will really unlock the next wave of growth. I think with both of those things, DeFi has the potential to scale 10 to 100x.
And in your opinion, what type of assets will be the most in demand? I mean, tokenized assets.
So two answers to that. So one is, I think tokenized treasuries, because the treasury market is $35 trillion, US treasuries, that, and with rates kind of, I don't know that we're going to go back to like 0% interest rates. I think rates will always be, I think rates maybe, if you look at the 10-year, it's in the mid threes. I think there will be a desire, instead of holding stable coins, which yield 0%, to hold US treasuries. And I think if you look at the growth of BlackRock's tokenized treasury product, BUIDL, and Franklin Templeton's tokenized treasury product with Benji, Superstate, and others, the tokenized treasury market has grown almost 3x year to date. It's still, last I checked, around $2 billion. So it's still relatively small, but it's growing very quickly. Compare that to the stablecoin market, which is 160 billion. Tokenized treasuries at 2 billion, I think, has a lot of growth and a lot of upside that it can capture from tokenized treasuries or from stablecoins. So that's one area I think tokenized treasuries will grow meaningfully. The second is, I'm very interested in the tokenization of long tail assets. So these are assets that don't have established capital markets. These can be tokenized YouTube royalty streams, tokenized watches or baseball cards or physical collectibles. These can be tokenized farmland or tokenized carbon credits or litigation finance claims. I think each of these markets individually may be, measured in the tens of billions, but not the hundreds of billions. And they're very fragmented, and they're not serviced by Wall Street directly. So, it'd be very difficult to buy $10 million worth of watches, right? But if you wanted to speculate or fine art, right? It's not simple, but if you wanted to securitize those assets, settle them instantly, outsource custody, borrow against them, all these things are possible, I think, more seamlessly through tokenization than they are, in the traditional world today. I think we're going to see a lot of adoption there. We've looked at lots of companies building in those categories on that long tail. And I think that, my hope is that one of those categories gets to scale in 2025. And I think others will follow.
Yeah, those are interesting examples mentioned by you. And while we have been discussing DeFi, and there are different DeFi projects. There are crypto native DeFi projects, different lending protocols, but we see as well now adoption of DeFi by some institutions. Like, for example, the test rate of JP Morgan on Polytrade using Aave. But among all those biggest players, it's still in some kind of test. So do you see in the future adoption by them of the DeFi on much bigger scale? And how many years will it take? And how much they will compete with the crypto native platforms?
Yeah, I mean, it's interesting. It's happening right now, at least what we're seeing. So if you look at BlackRock, they have their BUIDL product, right, which is tokenized treasury. They're lobbying MakerDAO to allocate some of their treasuries towards BUIDL. So it's interesting to see BlackRock, the largest asset management firm globally with 10 trillion of AUM, lobbying MakerDAO, a DAO on Ethereum, to get an allocation of its treasury. Like that's happening here in 2024, not theoretical, actually taking place. So you are seeing that things like that actually play out more often than it may appear today. And that's only going to grow. I mean, look, you've seen KKR tokenize interests, LP stakes in one of its healthcare private equity funds. You've seen, SocGen, one of the largest banks in France, tokenize euro bonds and post them as collateral through MakerDAO. You've seen the California DMV tokenize driver's license and vehicle titles on the Avalanche blockchain. A lot of these things, that's not a pilot, by the way. That's like in production. And, these things are all live. And the number of like actual in production institutional usage of DeFi, those things are kind of, I think, have moved past pilot and experiment phase into like actual production. And so I think that's exciting. I think it's only going to grow. And also, as you know, I mean, I think a lot of institutions are, we're waiting for more regulatory clarity to enter the space and also look at their peers and what their peers are doing as kind of signal. And so given what you're seeing from BlackRock and others, I think that kind of provides some sort of hall pass for other institutions to also do the same. Now you have Fidelity, Invesco, WisdomTree, Franklin Templeton, all with Bitcoin spot ETFs. Many others with Ethereum spot ETFs. These are some of the largest asset management firms in the world that are now marketing Bitcoin and Ethereum to their clientele. It does remove a lot of the stigma, if there was one, for the industry. I think these things take time, but like the direction of travel is very positive. Has been really since FTX. I think there's just been many, many more institutions in the space that are using these products, every day because they simply just find real value in them. One last thing I'll say is Larry Fink, CEO of BlackRock, he had a great interview with Bloomberg recently. And he said there have been two great shifts in capital markets, two great kind of technological revolutions in capital markets. The first was when we went from paper to electronic in the 1970s. So when stock exchanges went from being recorded on paper and pencil to actual electronic exchanges and price feeds, and they went from analog to digital. He believes the second big revolution is the tokenization of every asset, because effectively that allows for instant settlement, more efficient distribution of funds and administration, more interoperability, which I think is big because right now, you may have your brokerage account, you may have your Coinbase account, you may have your Binance account, you may have all the private deals that you've made on AngelList or in Legal Docs, you may have your checking account. All of those different kind of financial portals don't talk to one another. They're all disparate and separate. And so the idea of moving all of these assets onto a single ledger and having composability and interoperability is explosive. And that's kind of like our thesis and vision for the space at large. And it's not only financial assets, right? Like there are other assets that people have. It's their university diploma. We invested in a company that's tokenizing academic credentials on chain. It is your followers and your content online. That's also an asset. So it's the title to your home or your vehicle, right? It's your financial assets. It's art. It's music rights that you've bought. It's this whole host of different assets that currently are disparate that you can bring on a unified single ledger and get benefits from holding them sovereignly, composability, programmability, interoperability. So that's like the 0 to 1. We're going to get there. It's just a matter of when, not if. But that I think is really the ultimate end state for this industry.
Yeah, that's really exciting that all these biggest players in TradFi now trying to cooperate with the biggest players in crypto. And as well, another challenge for crypto is not really adoption and legitimization by the traditional finance players of the industry, but as well crypto regulations. And in the US, it's been quite a challenge. So, given your base in the US, how do you foresee the current involvement of the regulatory framework landscape, and specifically what changes do you anticipate as we approach the 2024 elections in the US, and how might the outcomes of these elections influence the regulatory approaches to the cryptocurrency?
Yeah. So for the past several years, we've always said that regulation is an opportunity, not a risk. Like oftentimes people, who may not invest in crypto or follow the space closely say regulation is a big risk in this space. I don't really agree. I think regulation is the biggest opportunity for this space because previously we've had lack of regulatory clarity. When you have a lack of regulatory clarity, it makes it very difficult to build anything or do anything, or for institutions to enter the space, or really for users to enter the space, or to do business in the US. Lack of clarity is as good as not having like specific regulatory, as a regulatory green light, because you're kind of in a static state. And the industry's been living with that lack of clarity, I think, for a long time now. I think finally, regulation is catching up to the technology in a meaningful way. And we see this in all industries. Regulation always lags technology. Quick anecdote, I'll get back on the story, but when I was at TPG in about 10 years ago, we looked at Uber in one of its earliest rounds. I think it was like the Series A or Series B. And I remember that, talking about it with peers, and people were like, look, this business has so much regulatory risk. Like, this is ride sharing. There's no way the taxi unions are ever going to allow Uber. There's no way politicians are ever going to want Uber in their city. They don't have, it's unlicensed. And, long story short, we all know how Uber has played out is in different jurisdictions, they've had to like lobby politicians and kind of reach an agreement with them to on how they can operate within each city. And so despite the fact that, I remember Uber was kicked out of Austin, Texas, and people went back to hailing cabs, and people are like, no, this is terrible. Like, we want Uber. Like, Uber is actually like a 10x better experience than trying to call or hail a taxi. And that's the thing, is Uber's a 10x better experience than, taking normal ground transportation. So eventually regulation had to bend to a new technology that was better. Same thing happened with Airbnb, right? And the hotel unions. They said Airbnb would never work, too much regulatory risk, and look at it now, right? So with crypto, it's a better technology, better financial, not only better financial technology, but it's going to impact the entire internet, it's going to disrupt different parts of the Web 2 stack. And it's very clear all the ways that it's better. So it's just a matter of time before regulation really catches up to that and, coalesces around the right ways to kind of have it operate in like a safe and compliant way. So today, 2024, we're in a better place, I think, from a regulatory standpoint than we've ever been as an industry. So I think I'll kind of focus on the US. Bitcoin ETF approval in January 10th, Ethereum ETF approval 6 months later. Both presidential candidates are generally, open to like listening to the industry. You had Donald Trump speak at the Bitcoin Nashville conference. You're having discussion of a Bitcoin strategic reserve. You are saying that he will end kind of Operation Choke Point. You are seeing major court case wins with against the SEC. So with Ripple and you're seeing a lot of momentum with Coinbase and also with I think Consensus and Uniswap's cases and Paxos's case, et cetera. I think there's a lot of momentum, and I think there are a lot of people in the House of Representatives, in Senate, in Washington that really understand the importance of this industry, and don't want to see another country kind of get a head start or get a lead. They don't want to see that brain drain. I don't think things have ever been better positioned in the US. I mean, look, also, you had Senator Loomis put forth a bill for the US to buy 4 million Bitcoin, so 20% of the supply. I don't think it's going to get passed, but like just the fact that these bills are getting proposed, there's very much been a paradigm shift. That's just the US. The US is 4% of the world's population, 20% of the world's GDP. Globally, I think you've seen much more traction, progress. I mean, between Mika in the EU, what you've seen in the Middle East, kind of embracing the industry, investing in the space, providing a more clear regulatory framework. What you've seen in Singapore, Hong Kong, I mean, Korea, like you've just seen other countries like really embrace this technology and industry. I think the US has kind of been a laggard, but it's now finally catching up. I'm very optimistic. I'm very, very optimistic about where we could be from a regulatory standpoint and institutional usage standpoint, in the next, year or so.
Yeah, that's true. Now the regulatory framework seems to be much better. And as well, what's the probability of Bitcoin becoming a reserve currency in the US? What are your thoughts?
Well, I think that the probability that the US holds some of its balance sheet, US Treasury holds some of its balance sheet in Bitcoin, I think has like a reasonably high probability, in the sense that Donald Trump mentioned that all the Bitcoin that the US government currently holds, it won't sell. I don't think he was explicit about the US government buying more, but he said he wouldn't sell. So that I thought was positive. I'm not sure the Democrats have said exactly what they would do with the Bitcoin that the US government currently holds. I think it's just a matter of time before, other governments globally besides El Salvador hold Bitcoin strategically. And I think that you kind of get this tipping point where if a few governments start to hold Bitcoin, then you get to like, you move very quickly from like 5 governments holding it to like almost every government holding it, right? If the US is holding Bitcoin or announces it's holding Bitcoin, I mean, the other countries like start to look at that and say, maybe we should do that too, right? And then you get this like gradually, then suddenly kind of exponential growth. I think that the game theory would support that as a potential scenario in the distribution of outcomes. So I'm surprised actually that in 2024 we haven't heard of other governments, accumulating Bitcoin.
Actually, they probably accumulate, they just don't announce it publicly.
Yeah, maybe that's the case, right? Yeah, maybe there is accumulation, but just not the announcement of that accumulation. So yeah, I mean, that would be very positive though, right? Because like, you've seen, it's an interesting asset class in that you had individuals that owned it at first. Then you've kind of that's transitioned to more institutional ownership. You have companies that own it, like MicroStrategy, and you now have some governments like El Salvador. You have other governments that own it because they've like seized it. They haven't bought it. But I do think when governments start buying, then governments hold gold. Most countries hold gold on their balance sheet, some allocation to gold. I think holding Bitcoin is a very logical extension of that. And I think the demographic trends are very favorable, right? Because I think if you look at millennials, if you look at Gen Z, millennials, and baby boomers, millennials are starting to take kind of more and more important positions of power in government, where and there's a strong preference that millennials have shown towards crypto and Bitcoin relative to gold. So I think there could be some rotation there as this as time goes on. I think the trend is our friend in terms of the pivot towards Bitcoin.
Yeah. And as well, in your opinion, for how long this bull market lasts?
Well, it certainly doesn't feel price-wise every day like a bull market, but okay, let's say it is a bull market. I you know I think it's tough to say because like this whole concept of like bull market and bear market is kind of a bit binary. Look, I think that there's going to be a lot of growth in the industry and the value of tokens over the rest of this decade. Super short term, it's difficult to predict. I do think there are reasons to believe that in this particular kind of market cycle, we're early. So that's kind of what I'll say on that.
Yeah, hopefully your prediction is true that we are still very early. And thank you, Dan, for such interesting conversation, and thank you for sharing your thoughts and expertise, both from TradFi and crypto space.
Yeah, thanks a lot. Really appreciate the time and the opportunity to speak today.
Yeah, thank you.